Okay, hi everyone. Welcome back to another video. Today I'm extremely excited to have Felix onto the channel. So we'll be discussing a little bit more about Alibaba, and I believe that we actually do have quite a few overlapping audience. I think at least on my YouTube analytics as well. And some of you have been saying and have been commenting on my channel to get Felix on board to talk a little bit more about and to share some of his interesting insights on the company as well. So maybe Felix, you want to give an introduction to some of my viewers before we start?
Well, Chikeng, first of all, a huge thank you for having me on your channel. It's a privilege. I'm really excited to be here. And I actually found you also through my viewers because they were saying to me, "Hey, you should listen and watch to Chikeng. He does really fantastic Alibaba coverage." And I completely agree with them. Your coverage is way more in depth than anything else I see out there. So really fantastic for and thank you for keeping us all informed. Right. And I mean, if you don't know who I am, I used to be a sort of lawyer, was an investment banker for a little stint, and I've been an investor for some time, and I run a channel called Felix and Friends, and we of course cover a lot of Alibaba. That was actually one of the first stocks I covered about a year ago when I started on YouTube. But the whole mission really is to kind of help investors become better investors and to get us to financial freedom. But I'm super excited to talk about Alibaba. It's been a very exciting year, not quite in the way that we would have hoped, but there's definitely plenty to talk about. So I'm looking forward to this, Chikeng.
Right. Maybe we can start off the conversation easy. I think the earnings it just came out, and maybe you want to share some of your general thoughts about the earnings call that just happened last week or so.
Sure, gladly. I mean, my take on that was that I didn't have huge expectations. I kind of thought this was going to be a sort of fairly flat set of earnings because we were told at the investor day, and I think that was December, wasn't it, around Christmas time, that they would be investing in, you know, the local staff, the international staff, in cloud and so on. So I wasn't looking forward to too high expectations, really. Part that is exciting is certainly the local stuff. And we touched a little bit, we spoke yesterday on that, Chikeng, is that some of that does, of course, have lower margins. So it's not quite the kind of e-commerce clean business that we are used to. And on the cloud side, I think it was a little disappointing. I was hoping for a little bit more of a growth there. We still have a bit of the ByteDance numbers, I think, impacting there. And then, of course, we have the education and the gaming stuff that's impacting cloud usage. So I still think that's where the growth lies for them, because on the e-commerce side, they kind of hit a plateau to an extent, right? Yes, they can keep getting more money out of people, but if you take the last 12 months into account of fines, regulatory pressure to basically lower fees that you can charge your customers, the merchants, and all of the kind of restructuring that's been going on there, I think we basically couldn't have hoped for, you know, these blowout earnings. So I think that was an unrealistic expectation. So yeah, I'd love to hear your point of view on that too, Chikeng. What were your key takeaways? Were you disappointed, or you thought this was about right?
I think to me, I was somewhere in the middle. I think I wasn't extremely excited about it. I didn't have high expectations as well. But it's true, I think it came in a little bit more on the softer side of things. I have never heard a bear of Alibaba saying that, hey, I'm not buying the stock because it's too expensive. I think we can all agree on both sides of the aisle that Alibaba is currently trading at a pretty interesting valuation, I would say, the least. But that said, there are definitely some concerns about the fundamentals of the company, and like you said, some form of restructuring that is happening on a fundamental level. So I think also, to pick up one of the discussions that you asked me yesterday, I think I'll ask back you the same question. So we talked about a little bit in terms of the e-commerce pie, right? And how they're trying to go into some of the groceries and a lot more lower margin business. So what is your take on that? And do you agree with this strategy moving forward? And do you have any opinions on that?
Yeah, I'm a little torn on that. And just to explain the process here. So Alibaba, I loved it as a business a year ago because it was a clean e-commerce platform business versus Amazon, who's got tons of inventory and warehouses and lots of overheads and expenses. Alibaba always had better margins because they were just a platform. Here is a merchant. We give you the greatest platform possible to find customers. We take a fee, possibly on both sides. And that was the business. It was very, very simple. Now, by moving into kind of online, offline stuff, by going into groceries, acquiring supermarket chains, going into fresh produce, and at the same time going into the manufacturer to consumer side. Now, that side I'm a little bit more excited about, but groceries are in most developed countries a sort of 4% or less margin business. It's a pretty horrific business to be in, the supermarket chains, except for the UK, where you can get away with charging premium prices for food. But that's pretty much the only place in the world. So that doesn't excite me because I don't want to invest in a business with 4% margins. But the reason they're doing that is to pick up the sort of remaining customers they haven't got yet. And I think also to keep the ones that they've got, and sort of to build a wall or a moat, and depending on which visual you like, going up or digging, and basically ring fencing themselves off from PDD or from JD, because they are both in that field. And if you go and buy your salad and your water and your tea and your day-to-day grocery items somewhere, and they also sell you, your phones or whatever else, you might just stay there, and therefore Alibaba might lose them. So I don't sort of see it as this is really our growth and our future. I think this is more like we have to do this yes, they will grow with it. It's just that it'll be lower quality growth. But I think it's more like to maintain our dominant market position, we have to expand kind of into every other part of the commerce world, really. Every part of retail, Alibaba essentially wants to be in. And that makes sense in Amazon's doing the same thing. They're selling items where they're making very, very low margins on, and they're doing that because they want to keep you as a client. And in the long run, it does improve the lifetime value of the customer and so on. So there is sense in that. It's just that if you look at it purely as, 20% growth in that sector, that's probably the equivalent of like 2% previous e-commerce growth. So that's kind of this, the kind of position that they found themselves in, being in a very, very established market by now. But yeah, what was your take on that, Jikeng? Were you thinking this is exciting to go into groceries, or are you thinking maybe the M2C stuff is more exciting?
Right. I think it's true. I think the tension is definitely there about this crossing over. And it really feels like when you observe on both sides of the shore, right? In US, you have Amazon. And then in China, you have Alibaba. They used to have very different DNA, right? DNA structure of the company. And then over time, Amazon on one hand is trying to increase their margin. They try to go into AWS. They try to improve, go towards their subscription model. Then Alibaba on the other hand, they started asset light, and then now they're involving a lot into CapEx and to invest a lot more into the business. So they're converging at the end of the day, and it does make me feel like, hey, maybe in Southeast Asia, I believe you know of this company C Limited. Who knows, they might be the next that is going to converge into the same e-commerce DNA as well. And it's certainly exciting to look towards and see, is this the natural progress of all e-commerce company, or is this just some specific issues that were developed thus far in this space? What do you think of all these different companies?
I think you might be right. I think it might be the life cycle of that business, is that you start off with whatever came to you naturally. I mean, Amazon started as a book retailer, right? We have to remember that. That's where they came from. And therefore they had warehouses and they had that sort of DNA of let's get inventory and then let's ship it out. And we're very good at that. And they build their customer network through having the best logistics network. I think that's kind of what makes Amazon great. So they've always done that. Alibaba was very, very much on the other side of it, just saying, very much like Etsy at the moment. Etsy is a good comparison of what Alibaba used to be. We just give you a platform, we process your payments, maybe we finance some of those payments, and we do nothing else. And then you want to make that better. The next logical offering for your merchant becomes logistics, initially through partnerships, then you take it in-house. And that's kind of, I think you're right, there is this progression here towards taking everything in-house and owning your logistics chain, owning your retail spaces, which again, you can use for deliveries, right? You're seeing that in a lot in China, that people actually, they're not at home, but there's a shop at the corner where you can pick up your deliveries. And Amazon coming from the other side, both now moving into the cloud business very heavily, which is, I do think, where probably 50% of the profits will come from down the road.
Right.
And that in itself is an odd business because it isn't really related to the e-commerce business. I mean, you can power your own e-commerce business through the cloud, but actually they are very, very separate entities. I mean, there isn't really a need to have an e-commerce business because you happen to have a cloud business.
Right.
I mean, look at Microsoft, right? They're managing to do the one without the other. So perhaps somewhere down the road, you might see these companies split. They get so big. and that you might see that separation. I've certainly seen some fund managers asking Amazon to do that, but obviously Amazon reluctant to do that because it would create a fairly average Amazon business and a truly exciting AWS business, and they want to kind of cross-subsidize and keep growing and keep, building. So yeah, you have to wonder sometimes whether our management growing a business because that's the right thing to do, or they're just doing that because they have nothing better that they can think of.
Right.
I do sort of wonder sometimes when you get to these plateaus in terms of growth with companies of, where is actually the right place to head here? I don't know whether you have any thoughts on what might be the best way. Where do you see Alibaba in 10 years?
I think at the end of the day, you brought up a very interesting point. If C Limited today, after expanding into e-commerce, and then they're gonna come out with C Cloud, for example, and then they start off their own cloud computing division, then it really seems like that's the classic playbook for all of this different e-commerce company. But at least maybe the 10-year, 20-year goal for Alibaba, I think they will still stick to their gun. Their mission and vision is always to make businesses easy. And I think cloud computing, at least on all the different infrastructure as a service, software as a service, and all the different product offerings that they have, it is a fundamental key pillar in allowing for businesses to flourish, because it allows for all these small businesses to harness all these capabilities in the long run. So that's at least where I feel like Alibaba's management is looking towards, and where they envision the entire company. But maybe just to pivot a little also, I believe that I'm a long time fan of your channel, and I'm also an avid viewer. So I did recently saw you going through some of the analyst reports, maybe from Deutsche Bank and stuff like that. So maybe you want to share with some of my viewers what are your general takeaways? Do you have any some sort of feeling or from your own research and all these analyst reports? How are Wall Street exercising the judgment on this company in today's climate?
Sure, I'm very happy to share with you what I read. So the feeling I was getting towards the end of the year, and that's also what a lot of the reports were saying, is that they sort of China Wall Street, if I can call it that, the analysts locally were looking at March as a potential pivot in the sense that the regulatory overhaul might be near an end. And they're sort of saying after that, yeah, there'll be some small stuff, but the big stuff is out of the way. And that is, of course, what we kind of are looking for with the whole China stock sphere, is that we kind of want to get a signal here from the government saying, hey, we've done our homework now. We're happy with the legislation that's in place, and now we're going to let these guys grow again, and they know where they are and aren't allowed to go in terms of legislation. And I think just to take a step back on that is that China just didn't have in place the kind of legislation that you have in the US or in Europe, and what they have put in place is actually a lot of the time a copy and paste job of what American or European legislation looks like. So I don't think they've done anything crazy here. It's just that they've done it in a very, very short period of time. And that's just what happens when your economy grows incredibly. You will just have areas where you have to catch up, and that's what they've been doing. So I think that's one part here, and I'm still kind of like looking at that, is that actually happening as we head into March now? The second thing, what I see from the reports I've read, is that they're basically saying, look, earnings were okay. They weren't fantastic, but we do seem to think that the investment that Alibaba has been making in the last few quarters might start to pay off from Q2 or Q3 onwards, and that we might be through the worst of the sort of transition here, and that we are seeing the roadmap ahead, which is international growth, which is local growth, LME and all that stuff. And that they sort of see a kind of light at the end of this tunnel here in the second half of the year. So that's kind of what I see there. And that's, of course, encouraging, especially if that were to come hand in hand with an end to the regulatory sort of uncertainty, which is, I think, why a lot of institutions jumped out of the stock.
Right. Maybe also you did touch on a few points about regulatory uncertainty. Maybe you might want to share what are some of the key factors that you look towards, especially when you look at Chinese stocks specifically. Do you look at it as like a recovery play, as a short-term play in terms of how when there's a re-rating, when multiples start expanding again, or do you really look at it as a long-term play and really investing in the idea that, hey, the China growth story is still not dead? How do you position yourself into looking at all these Chinese stocks?
Okay, no, that's an interesting question. Thanks. So generally speaking, I'm a very long-term investor. So I want to buy things, and I generally want to add to those stocks every single month, more or less come what may. Now there are exceptional events, say like Alibaba. I stopped buying Alibaba, I think, in February last year. I bought a bit after the Christmas crash and so on, and then kind of thought, and I talked to a lot of people in the finance industry in China, and they were all saying, this is going to get a lot worse before it gets better. So I stopped that, and I've been trading options on that on Alibaba ever since, which has been nice and profitable, and then reinvesting that. But my general philosophy is pick great quality companies with great margins and great return on capital employed and good solid growth and management able to execute, and then stick with it, and you make a lot of money. Now, the problem we had with Alibaba at the beginning was all related to the finance arm, to Ant, and to insurance business and wealth business and all of that. And I wasn't concerned about that because that's a separate business. And yeah, that's something Alibaba owns a nice chunk of, but that wasn't really the core problem. When we got into antitrust and dominant market positions and, forcing merchants to pick one over the other and favoring people and playing with algorithms and all these kind of things, you suddenly thought, okay, wow, these guys are getting sophisticated, but this is going to put a margin squeeze on, not in the sense of us investor margin squeeze, it's going to depress margins. And it has done exactly that. And that, of course, then is reflected in the stock price. Now, I think most people would look at the stock price and the fundamentals and go, what's going on there? Why is that so cheap? But that's because the market hates uncertainty. And we just don't know today whether tomorrow there's going to be a new piece of legislation out that'll affect, I don't know, logistics or last mile delivery or, cloud computing further, or, we just don't know, right? We're just in this space where we've been hit over the head so many times with surprises in legislation coming out, which in fairness to the Chinese regulators have, I think, all been reasonable pieces of legislation. It's just, we could have done with them 10 years ago, and then we wouldn't have had the surprise. So I think that's really what's got investors on the sidelines, including me here. And I think the business is potentially fantastic. I think China will continue to grow. I think China has a long way of getting people into, middle class and wealth. There's a lot of sort of easy growth there, if you will. And Alibaba plays a big part of that. And I think we also see a lot of support for Alibaba. I think the government likes the M2C business. I think they like it that, an apple orchard grower somewhere in the middle of nowhere can ship their produce to more affluent consumers in Shanghai and make a bigger margin. I think that's a good thing, right? It's a good thing for people. Why should it be the distributor or the supermarket that makes that money? So I think there is a lot of that. And I think they also actually like the whole payment system and the processing, and they're just giving banking essentially to those people who don't necessarily have accounts. And there's a lot of stuff here that makes sense from a social and economic policy point of view. Similarly with cloud again. I mean, all of that makes sense, which is why China, I think, is also so active in rolling out 5G and these things, because they see that is how we get people to become more affluent and more independent. So I think Alibaba has a big part to play. And I think if we look at the last year, despite all the regulatory kind of, hammer hits over the head, the government didn't split Alibaba up. They didn't really go after them in a harsh way. Yes, they told them off for doing things that they shouldn't have done, and I think there were excesses. But I do feel that these businesses like Tencent and JD and Baba have a big part to play in the economic growth of China. So I'm not gloomy on that. It's just we are in a bear market. We've got COVID. There's all these things happening. We have all the regulatory changes. Everything happens at the same time. And then the market overreacts. But is Baba going to double by the end of the month? No way, because so many people have got burned and are afraid of what could happen next. So I think we do need more clarity here from regulators. But yeah, I'd love to hear your thoughts on that. I mean, how do you feel about this uncertainty? And I know you also talked to a lot of your viewers. What sort of a temperature gauge do you get from your side?
Right. I think it's incredible. For the last 5-10 minutes, through your sharing, it's clear that you have a comprehensive knowledge about what's happening, and it's really this tension always amongst yourself, right? You have so much tailwinds, circular tailwinds, even the e-commerce front, the China's growth, the cloud computing front. Yet at the same time, you have to grapple with that uncertainty, that uneasiness for you to really put your money where your mouth is at, and to be able to invest in something that the next day, like EdTech, for example, if they want to shut down e-commerce, poof, there it goes. To a large extent, because I only cover one topic and one stock, to many of my viewers here, I do get more attached to the stock day after day. And of course, I am wary about not falling in love with the stock, and not trying to paint it in such good light, and to always be skeptical about my own investment decision. But it really seems like the more I understand the entire climate, the competitive landscape, thinking of it from a more empathetic view, really role-playing the Chinese government, it seems like it's a more and more interesting company. And if I am really in being an investor of that company, I'll be more than excited to scoop up shares at this price point. But of course, not barring the fact that the markets can stay irrational longer than it can stay solvent. Today it's at 100, tomorrow it can be 80. I think next month it can be even at $50. So at the end of the day, I think you have to control your position sizing well, diversify appropriately, and to adjust it based on your own risk tolerance and what are your financial objectives and stuff like that. So we always like to qualify that, hey, this is not financial advice. So I think to a large extent, it's true. I agree to most of the discussions that you brought about surrounding Alibaba as a company. I still fundamentally believe that it's I wouldn't say that the fundamentals were totally unaffected in a way. Definitely there were some kinks, and there will be a lot of friction, because this is a transition phase, both for the company and for the government. In this regulatory space, they have to, there is this friction about them trying to navigate this black hole, and how they're supposed to better themselves and to provide more value. At the end of the day, why is there this idea of common prosperity? They want more people to be able to flourish and prosper from all these different developments, regardless whether it's in private or in public. So all these enterprises play a very huge role. Personally, just a temperature gauge, I think some of the bulls are wearing out. I think people are getting tired. People are always hoping for a good uptick in the share price, or maybe a turn in events. Maybe suddenly a 25% increase in revenue might bring us by surprise. But people are constantly being disappointed quarter after quarter, and I understand where they're coming from. But that being said, I think temperament is a very important skill set, at least in the stock market, not really your intelligence. So it's not really in the brains, but it's in the stomach. So for me, likewise, I think in my subsequent video, I'll be releasing that I haven't been buying for the last 2 months. I think right now I'm also playing with some options. I'm selling puts, but it's long dated puts in 2023 or and beyond. So in this case, it's really up to anyone to decide, but I still feel quite good about my position thus far. And yeah, that's about it. But maybe just to end off this quick discussion, I think the last question, like how you posted in your video title, right? So do you think this is the end of Alibaba?
No, I don't. I mean, I sometimes use titles to get attention,
Right.
and kind of get people interested and excited, and I think that's the way the world works, right? I mean, that's the way headlines operate.
Right.
And it was a fantastic conversation with you. I really appreciate that, and I appreciate you finishing it off as well when I got kicked out. No, I don't think so. I think this is a business that's going to stay around. I think there is no doubt about that in my mind. I think you made a really, really important point about position sizing and not putting all eggs into one basket. You know, we are not in a casino where we have to pick red or black. We have options here of lots and lots of great stocks, and there are plenty of stocks with less uncertainty. I mean, you know, you can buy, I don't know, you know, Microsoft or something, and you have a lot less uncertainty there in a sense than say with Alibaba. And I would always very much encourage people to properly learn and go out, and don't get this sort of religious attachment to a stock. We can fall in love with a stock, but that's not usually what gets us to fortune. And I think that's what we all wish to achieve here. So I think that's an important thing that you put out there. Thank you for that. I think Alibaba will keep growing. The question is, will they fall into sort of a long-term growth of, say, 10, 15%, at which point multiples will be still above where they are now, but they're not going to be double or triple necessarily, or more than that? Or are they going to find that there is more hidden growth inside their business by, you know, they're going aggressively into the luxury space, for example. People are not traveling as much, so they could be selling, more LVMH goods at higher margins. There is potential here for actually improving margins in e-commerce, and with live streaming and all the sort of technologies that we have now, you can actually get people to make higher value purchases online that they wouldn't have made before. People wouldn't have bought, I don't know, a $5,000 Gucci bag online before because they weren't quite sure what they were getting. But they do trust Alibaba that it's genuine, and they can actually see it and talk to people and stuff. So I think there is all of that, and there is all the internet going meta and becoming properly three-dimensional, and sort of us getting a feel for holding the product and all these things. This will all come, right? You will have gloves that'll mimic the weight of the product you're holding. And in all of this, it won't just be this kind of we are watching passively like we are here. So I think that does provide another set of growth for Alibaba. And within that, I think there will also be tremendous advertising revenue. And we're seeing that with Amazon, right? Amazon generated in the last quarter more advertising revenue than YouTube. And they're just getting started. So simply by having this large ecosystem and having a lot of daily active users, you can actually make a lot of money out of these little side businesses, put a little advert here and there. Yeah. And I think there are lots of opportunities like that. It's just that Alibaba has had such a busy year, I think, with regulators. They haven't necessarily been 100% able to focus. And I think when we listen to not this earnings call, but the one before, they sounded exhausted. I mean, they sounded really, really tired. I think it was Maggie particularly. I think she had a cold and she was just like, oh my God, another question. And I think, that's what happens. And we need energetic management. We need excited people who have a new plan, who have a new vision, who rather than fighting stuff off. And that's often what we see with very large businesses. Think IBM or someone like that. They get bogged down by lawsuits from governments, fights with regulators, and all the, C-suite is just fighting, defending, and people lose sight of where they're going. So I think hopefully over the next couple of quarters, we see them pivoting towards where the growth actually lies, coming up with lots and lots of new strategies. They've got tons of money. They've got tons of free cash flow. So there is a big opportunity to reposition the business. And it's a great business. The underlying business is there. It's a bit like Facebook. People say Facebook is dead. It's like nonsense. They're making so much money from the core business. They can afford to throw 30 billion at something and see if it sticks. And it's the same position I see with Alibaba. So I have a lot of hope for the business. It's just the reason I'm not buying also, I actually teach people literally how not to buy a falling knife. That's one of the things that I teach in my financial freedom programs. And so for me to do the same thing would kind of be nonsense. And there is textbook theory, which basically says you should only be buying things once momentum turns around. And we haven't seen that yet, in fairness. So I think your strategy of maybe selling puts when volatility is high, or, short strangles and condos, those kind of type options things can get us nice revenue, especially if we already hold the stock. And we can make some money out of the holding while the stock isn't really going anywhere. So sorry, that was a very long ranting answer to a very short question, Chikeng.
No issues. I think, like you said, busy is an understatement for the entire management team for the last 1 year. But it's true. I think whatever you have put nicely, it's quite funny how some of my Alibaba investing community is quite interested in Facebook as well. Then we had a short discussion on Discord, and people are saying we are a very weird bunch. We like companies that are falling, that are on discount, and that seems to be doom and gloom and bleak at the same time. But of course, I think I'll just like to also qualify that everybody have different investment philosophy and strategy. So you should, the more important question would be to find something that suits you. And it does not matter whether your neighbor is earning a lot more than you, or whether his strategy over the last 2 years has managed to give him tenfold of returns. I think you have to look at the risk reward perspective and to adopt one that is suitable and comfortable for yourself as well. So I think at least on this Alibaba discussion and topic, it was a very nice conclusion from Felix and his understanding and his sharing of his thoughts and insights. So Felix, thank you again for coming on to the channel and to have this collaboration.
Thank you very much, Chikeng. Absolute pleasure. I look forward to having you on some more. And I want to encourage you, cover some more different stocks, because if your audience is interested in Facebook, for example, start covering that. And I think you can just sort of grow from there. And I think we would, as a YouTube community, would be better off for more of your insights. So thank you for everything you do, Chikeng.
Yeah, thank you for your for all your different sharings as well. Okay, I'll see you in the next video. If not, I'll see you on the moon. Bye bye.